It's Quant Trade Edge, and I wanted to go over our setups from yesterday and show you how they played out. This first one is in the Russell, and among the indices, the Russell had the best setup because we had a big green candle, lower tail. Taking that out, would give us follow through. And if you compare that to something like the NASDAQ, had already broken above the highs, and after such a large day, you don't necessarily get a lot of follow through. I'm sorry, this is the S&P, and the NASDAQ, same thing. This had already broken out, so the Russell was the one that hadn't yet broken out. So if we, follow the same rules again, and take it down, this time, the breakout happened a minute after the open. So we had to get very granular, take it down to a 1 minute chart. And again, I'm focusing on just the bars because that's all that matters for this methodology. This previous day's high was 2074.40. This bar's high was exactly 40. This bar's high was 50. So we made that daily high violation right there. And now if we put our Gann counter on, and this is a 1 minute chart. I've just blown it up so we could see it very clearly, but we got this A, B, C down, and this is our risk bar right here. And that risk bar is only 2 points wide, so 73.40 is where we hit. I guess I have to squeeze it back up a little bit. 73.40 is where we hit 4R. And you can see that this low, was not violated. So that was one 4R trade. And it was interesting, as things kept pushing down, it still managed to hold that initial low. And then it eventually went up to probably about 6.5R before we had a bigger break there. The other thing we were looking at was copper. And I hope you can appreciate that I'm following up on everything, not just cherry picking things that work out wonderfully. Copper was frustrating this morning, but it didn't have a low violation until 6 in the morning, 6:05. So once we had that low violation, it was very straightforward on the 5 minute chart, where we had a very clean ABC up. And hopefully you're getting good at seeing these without me even drawing it in. It just takes a little bit of practice, but there was our ABC up. And we did go make new lows. If this was that initial low, we made one new low here, one new low here, one new low here. Then who knows what that was. This was a little spike, 915, 920. Might have been news related. Might have been a Japanese trader committing suicide. I'm sorry, I don't mean to say that flippantly, but that actually happened in the past. It was a Japanese trader that kept doubling into his position, found himself deep underwater, committed suicide, and someone else had to take over his book and clean up the mess. But yeah, that for our purposes, that would have stopped us out right here on the 5 minute trade. Before, of course, going forward to make an easy 4R on what we were doing there. It's just how the cookie crumbles sometimes. Now, if we're watching this on a 15 minute chart, it was pretty sloppy. On a 30 minute chart, after this break, there was a clean A, B, C, but now this bar is so large that I don't even think we got 1R down to the low. So that's just something to keep an eye on. You can look at these in multiple time frames. My judgment at the time was 5 minute because this was a 6 a.m. break, and anyway, that's how that turned out. Now gold was interesting. So we had a good size up day. Today ended up being an inside day, and usually after a good up day you get play on both sides of the opening range. The opening range in gold is the range from 7 a.m. to about 7:40 a.m. So this was the range of that period of time, and as you can see, we dipped below, came back, went above, came back. That's the kind of two-way action you would expect after a strong up day. But I was going to point out something exciting in here. We can take out the GANs, and as I saw this making a comeback, so already knowing that we were below the opening range, looking for a comeback, there were two things that caught my eye. One was how strong the volume was on the buy side, and the way I color these bars are when you close above the high of a previous bar on higher volume, it's bright green. If you close above the high of a previous bar on lower volume, it's dark green. And the same thing with bright red and dark red. And what's interesting about this is it points out to you times when there's just a lot of green on the chart. And I believe I was looking at it on an even smaller time frame, and yeah, it was just like the green was overwhelming. And as we made this comeback, you'll notice that this entire period of time here was a hoagie inside of this bar. 1, 2, 3, 4, 5, 6, 7, 8, 9 bars inside of this one bar, and when it broke, we basically made 2 times the size of the hoagie. I believe it was to 61.8 or 61.9 was 2 times the size of that hoagie. So hoagies are not just for 1 minute NASDAQ charts. You can see them in the context of other setups that we take. And then natural gas was another interesting one today. So this is something that has truly gone parabolic. I think if you remember, we pointed out the higher lows, the continuation of making higher lows, and how this had the potential to go parabolic, and it basically has. Today, we're already in overbought territory, but something that popped out as easy to look at was there was a hoagie right here. Let me put the GAN back on it. And this is a 15-minute chart that I was watching, and let's see if I can find where that was. There we go. So from this high of day at 7:30 in the morning, we had a very clean ABC down pattern. Take that off. I'm not sure what I did to it there, but let's start over. Yep. Okay, take away all of these things. Yeah, so basically from that high of the morning, and again with this indicator, you don't have to actually do the bar by bar because it does it for you, and you can see that was an ABC off the high. And then to juicy, make it a little juicier here, we had a hoagie again. So this is a 15-minute chart, and we had 1, 2, 3, 4, 5, 6 bars inside of it before we broke higher. And what's really interesting about that is we started the year in natural gas with a 6-bar hoagie. Probably didn't show as well in this contract month. It showed better in the February contract month, but we had 1, 2, 3, 4, 5, 6-day hoagie that led to a big move there. Here it is on the 15-minute chart, and that was your first reason to get in. But then what also ended up being very clean is after that breakout from the hoagie, we had a very clean 2 waves down on the 5-minute ABC, which turns this bar into your risk bar. And we got about 3R up here. Didn't quite get to 4. It's late in the day. But, this brings about another philosophy, a trading philosophy. Would you rather capture the 15-minute hoagie where your risk is roughly 6 cents? Or would you rather get a worse price on your entry and catch this here, that has a 2-cent risk? And again, everybody has a different answer to this question. My goal is to find the easiest way to hit 4R on a trade. So, I'm not necessarily, I'm not averse to getting in early, and then I can move my stops up. But I would much rather catch a tight risk bar, get 4R, be out, and look to reload. That's just my philosophy. Other people, it's also a size-dependent strategy. If you're buying 1,000 contracts, you can't necessarily get it all here. You're going to have to accumulate within a range. If you're, trading a more reasonable size, reasonable is in the eye of the beholder. If you're trading a smaller size, you have the flexibility to get in wherever you want. So just want to point that out because this was a good 15-minute entry and then a subsequent good 5-minute entry. And one last thing I wanted to point out was on the NASDAQ. When this was rolling over during the day, it looked pretty ugly, but it was just what's called a liquidation break. And what a liquidation break does is it comes out of nowhere and it just goes very, very hard against the direction of the established trend. And it does that to freak people out and get them out of their positions because they are positioned in the right direction. So here, this is what happened in the NASDAQ, and I want to show you how to spot a liquidation break so that this isn't a change of trend. This is just a flush to shake out weak hands. And the way we know that here is this entire move down is just one leg. You can see from our bars, all of this was higher lows and higher highs. Lower lows and lower highs the whole way. This was an outside bar. But this whole thing was one leg. And now as we started coming back, you had one leg here, one leg there, which means you're getting a 5-minute U-turn on this break above. And we could actually count all of these higher lows that we had. We had 1 higher low, 2 higher lows, 3 higher lows, 4 higher lows, 5 higher lows, 6 higher lows, 7 higher lows, before we had another flush. This flush ended up being 2 waves. And this is roughly half the size of this move down here. But that also gave us another entry, another setup, and that is if we were watching the 15-minute chart, which is typically a good time frame. Below that can be a little erratic, but the 15-minute time frame would have you drawing this trend line across. Between this low. See if I did it right. Between this low right here and this low right there. So taking it down to a 5-minute, and when you notice that you've got your 2 waves complete here, 1, 2, 3, this again becomes a risk bar. And this isn't a necessarily a 4R setup. This we weren't doing this after the change of a daily trend, but it's just a way to catch this bounce off the trend line without having to just fish into the darkness and wake up with this thing all the way through you. This way you're waiting for it to catch so you can confirm that the trend line was respected, and then catch it in the breakout this way. So that's just something I wanted to point out, this little 2-wave pattern that was identifiable there. So anyway, it's been a crazy week. Friday has been a pretty mild day, just a lot of choppiness, not a lot of volume. Would look for Monday to be a little more exciting. Looking forward to our setups. We've got something like gold that had a nice inside day. The indices have already kind of broken out. So I'm not sure what play is left there. You know, copper's already broken down. The Australian dollar refuses to quit. So I guess gold will probably be the biggest, the most important thing I'll be watching on Monday. Anyway, hope you enjoyed this. Give me a like and subscribe to the channel for more of this content, and ask me some questions. I'm happy to answer.